Good morning, everyone. This is Srikanth Rajan from mpiinvest.com and welcome to yet another edition of our morning market report. So, looking at the market yesterday, we did see a big sell off in the market, especially after 3 p.m., which was just major sell off by the FIAs in India. So, FIAs have actually been selling huge, and yesterday they've sold to a tune of 5,871 crores in a day. The DIAs did try to support, but this selling which came in at the end of the day was probably the reason why DIAs could not support more, and DIAs had bought for 3,980 crores. So in fact, from the day's high of 17,275, the market has fallen. Nifty has fallen to 16,958 in the close. In fact, it is down 1.25% from the previous day's close. If you look at the FIIs for this entire month, they have already sold for more than 23,000 crores. So that means the selling is continuing, and that simply means that their investment is still so huge in the Indian market. In fact, the selling has been very intensive, especially on the HDFC twins, because they being having the highest weightage, one of the highest weightage in the Nifty, which is where most of the funds would be. So I have told you this earlier, when many of these funds are investing into, for example, the Nifty 50. So what happens is these are basically mutual funds from different countries which is investing into Indian index. So there would be index based funds where the investment goes in the weightage as of the market. So in this, one of the most important sectors which is more stable is nothing but HDFC, which is in the banking and financial sector. And that's exactly why we could be seeing this huge sell off in the banking and financial sector, and particularly in that the highest weightage goes to HDFC. And that's exactly why we are seeing huge sell off in the HDFC twins. In fact, yesterday it was not just the HDFC twins, I would say it was also major sell off in the HDFC life, which is again getting huge attention here now. So three major stocks from the HDFC portfolio is what is selling down by the FIAs. But does this mean the company has anything to be wrong on the wrong side? No, definitely not. The HDFC Group is one of the most trusted companies in India and fundamentally one of the strongest companies in India. So there is nothing fundamentally wrong with the company, but then this is just a temporary sell off which we need to hold on with patience. In fact, if you ask me, what I am doing is I am only adding the HDFC twins as well as HDFC Life along with Infosys and other IT stocks on a SIP basis. Yes, on a systematic basis, I am adding it to my portfolio at different price levels because I am sure these are things going to recover over a period of time. Right now, the major problem is nothing but the inflation. The inflation is going up. So day for yesterday, we had the wholesale inflation data which came up, and which also is a double digit, which is across 14%, which is really high. In fact, last month it was around close to 13%, and now again it 1% rise in the wholesale price index, which is the inflation data in the wholesale side, is definitely a negative for now. And when why all these things are happening is simple. It is because I've been telling you earlier also, it is the fuel. Yes, because of the Russia and Ukraine war, the fuel prices are going up and up. And like I've told you, since India's dependence on the crude oil imports is too high, that's exactly why the entire fuel and food, which is getting costlier. And naturally, when fuel gets costlier, food gets costlier, transportation is getting costlier, FMCG companies are going to get affected. So all these things are actually a small worry in the market right now. Until the oil prices settle down, things can be little jittery. But now, if you look at the market, I don't think 17,000 would be easily broken that way. So in fact, today if I look at the market, SGS Nifty is already indicating a opening above 17,000 for Indian market. So we might open higher than 17,000, but it is not that easy to break 17,000. Let us see. But if 17,000 is broken, 16,800 is something major resistance, major support that is going to come. But after 16,800, the next level which I would suggest is 16,600. So in these levels is something that I will be watching out for the days to come. In fact, I somehow strongly feel that 17,000 itself is a very strong support, and I am looking forward to some DIA support in the market today. But let us see what the market takes us through. So if you look at the global markets now, the 10-year treasury bonds in US has been on a rise, and it's one of its peak at 2.94%, which is the highest level since December 2018. In fact, if you look at the US market yesterday, after continuous sell-off in the US market for quite some days, yesterday was one of its best day, where Nasdaq actually rose up by 2.15% in a single day. Even Dow Jones Industrial Average was above up by 1.45%, and S&P 500 also was up by 1.61%. Things were kind of looking better when yesterday night when I was able to get to bed, but then this morning I understand there is something even major coming up. Yes, what happened is Netflix came up with its results after the market hours, and it reported a loss of 2 lakh subscribers in a quarter. So I've been telling you of FANG, right? The FANG stocks. So the FANG stocks, among FANG stocks is Netflix. So Netflix is one of the major contributor with highest weightage in Nasdaq, and that when a heavyweight like Netflix is reporting a bad quarter, you can imagine what happens. In fact, the post trading session, the futures are actually trading very low. In fact, if you look at Netflix post trading session is almost down 25%. Imagine fall of 25% in Reliance, how it could be. Yes, that is the situation. So which due to which the US futures are kind of again in negative area. But then this is specific to US. If you look at Indian market, things are still okay here, except for the inflation and the crude oil prices. So I am thinking that 17,000 should be a good enough level for the fall, and I hope we recover from here. So that's about the US market. Now coming to the Asian markets are also kind of trading in not a very positive side. I would say more of flat sector. So we just have Indian market to be seen, out of which with 17,000 as a major support. I should let us hope that the market actually recovers from here. Now coming to 17,000, when the market opens with a gap up, there is a tendency generally that there is some profit booking coming in. There might be a small movement downwards, but then it might even rise. So yesterday we could see the major support given to the market by Reliance. The reason was simple, because in Singapore, the gross refinery margin, which is called GRM, which is a benchmark of profitability for crude refiners, it has hit a all-time high. Yes, it has hit a high of rupees 17. It is $17 per barrel, right? In fact, just for your information, the last year the average GRMs was about $7.8 a barrel. Now it is at $17 a barrel. Now this is where refinery companies are into going into major profits. So Reliance being one of the refineries in India, and similarly we could see Mangalore refinery and petrochemicals, which is another refinery in India. So these two stocks actually rising up. So Reliance as a heavyweight was up almost 3.8% yesterday, supporting the market, and Mangalore refinery and petrochemicals was up almost 9.07%. So, and it was, in fact, Mangalore refinery was the top performer in the Nifty 500 with 9.07% up. So Reliance is of course in focus. So with the crude oil prices rising, Reliance can actually move upwards. But along with that, there is a news for Reliance as well, that they have actually gone ahead and taken a majority stake in Abu Jani and Sandeep Khosla, which is a luxury fashion brand in India, which they've taken a 51% majority stake, which of course is positive for Reliance. So Reliance has been exploring into every other kind of industry, and yes, this is an additional plus for Reliance. If you look at the Nifty 50 yesterday, the top gainer was Apollo Hospitals after a long time. It is up 5.7%, and of course there is no major reason. Basically, it is some buying because of the correction that has happened already on the stock. Now coming to HDFC Twins, there is some good news there. So in fact, HDFC Bank has opened 563 new branches between Jan to March 22, which is just in 3 months. And going forward, they are planning many other branches, which is ensuring that they are able to keep every customer's reach of within 1 to 2 kilometers. Currently, there is a bank which is within 5 to 6 kilometers range, HDFC Bank, and they want to bring that down to 1 to 2 kilometers. So this is actually positive. Like I told you, HDFC Bank, there's nothing to actually think twice about, and that's exactly I am invested huge on these HDFC twins. Now coming to L&T Infotech, there was the results announced yesterday wherein they recorded a 4% sequential growth in profit at 637 crores, led by higher income and revenue. The revenue also has grown by 4% quarter on quarter, which has gone up gone up to 4,301 crores. So things are looking good there, and also like there are some news about the merger with Mindtree. That will also sound good. In fact, the sad part is yesterday, day before yesterday, even the Mindtree results, which was really strong, though it came out really strong, it ended 8% down after the good results. Yes, profit booking kicked in. So this is why I tell you, results are something which is unpredictable. So after such a good, in fact, one of the best ever quarters reported by Mindtree, it is down 8%. This is how the stock market is. So results can actually turn the total way the market reacts to the stock. So similarly, if you look at ACC also came up with a net profit of 563 crores in the Jan to March quarter, and the profit actually is better than the market expectations. So let us see how it moves today and how it can affect the cement stocks. So something that's happening right now is, of course, a major sell-off across Nasdaq in this tech area. But again, we are expecting the new results of Tesla coming in, and we also have Alphabet, which is Google, also results coming in this week. So with these things, let us see if we can get some positivity. That is something that we need to look out for. But apart from that, if you look at India, today we have Angel One, Tata Elxsi, ICICI Securities, which are the major earnings to be focused on for the day today. With that, yes, I am holding a lot of positions in my option selling as well in the gold club. All of us are holding that, which is expected to move into profit as the market opens. So I would be looking at booking partial profits out of that and keeping fund ready if at all there is another fall, so that we can take more positions. But then this is, yes, a good opportunity for gold club members taking in positions to make some good profits during the market fall. So again, like I told you, I am expecting the market to stabilize kind of somewhere here, unless there is again a huge sell-off coming in from the FIIs. So yesterday, one of the major reasons for the such big market fall is because the FIIs actually sold with a huge basket order kind of at the end of the market hours, which was totally unexpected. So this was, kind of, they were taking some revenge on the market or something like that, because there was not even time given for reaction by the DIIs. So let us see how the DIIs are going to support. But yes, looks like if the market goes up, the FIIs are here to book more profits. So that's something we can watch out. So though I don't see a huge up move, but yes, probably market can consolidate, and probably the FIIs will go on selling mode for every rise in the market. So that's it from my side. Hope you got all the information for the day, and I'm sure you're ready with the market details now. Be confident. Let us grow financially together. With that, this is Srikanth Rajan signing off until we catch up in the next report tomorrow morning. Goodbye.